Hey, what's going on in the housing market? It's been a while since I've done an update, but man, let me tell you, there is opportunity if you can understand these concepts and see what's going on. Rates are high. We're not going to hide that, right? Inventory is low. We're not even going to try to hide that. But what are the dynamics of the market when we're in a situation where we have higher rates and low inventory? Well, that sends people running for the hills and they're going to wait. And what are they waiting for? They're waiting for either rates to fall, housing to crash, or both. All right, well, here's why I think that's a mistake to wait. Okay, since rates are a little higher right now, if you can afford the payment, because that's critical, we don't want to just throw people into houses with higher payments and create another 2008. No, that's not what we want to do. But if you can afford the payment, you're going to have a better chance of winning an offer in this market than if you wait for rates to get lower. Now, my personal opinion, and I'm going to say it, is I don't see rates getting too much lower this year. Heck, I could be wrong. I definitely could be wrong. But I've been watching the patterns. I see inflation has come down significantly, but it's going to take a lot of work for it to get down to where the Fed is comfortable. And so if we don't see a lot of movement in inflation, there may not be a lot of movement in rates coming down because rates tend to move in the direction of inflation. Now, on the flip side, if the economy is strong, that too is going to help keep rates higher. But if we start to see cracks in the economy and unemployment goes up and people start losing jobs, well, then that puts the Fed in a position where they're going to have to start to lower rates on the short-term basis, in which case long-term rates may fall. I'm not 100% sure I see that happening this year. Others are saying things that are a little bit different, but we thought it was going to happen last year and it didn't. All right, so far it's not happening this year, right? But there's opportunity in a market like this. And if you overlook it, you could miss out on getting the home that you want. So again, if rates were to come down this year, what that's going to do is bring in more buyers to an already low inventory market, right? Well, if more buyers are coming into an already low inventory market, then that means there's going to be more offers on the existing homes that are available. If there's more offers on the home, that's going to do what to home prices? Drive them up. Exactly. And you're going to have to give up more to get that home. In other words, you're going to have a really strong offer and potentially waive different characteristics in an agreement of sale that you wouldn't necessarily want to waive. But if you buy now in the market that we're in, there still could be multiple offers. There's still competitiveness, but there's not as much. You have a better chance of winning. And when rates were even a little higher a couple weeks ago, those that hung in there got homes. I saw that personally. My pipeline grew quickly because my buyers were able to win more of their offers because there's less competition, right? If rates come down next year, if you buy this year, that will create a refinance opportunity for you. If it takes 2 years or 3 years, there's a refinance opportunity for you down the road, right? So I like this statement, marry the house, date the rate. A lot of people don't. They think it's cliche. But I've been in the mortgage industry since 2005. I've never seen rates just go in one direction and stay that way forever. They've always gone up. People have closed loans. That creates the next refi boom when they come down. Since 2022, they've been going up. And the next time they come down, at some point, that's going to create another refinance boom. So I do believe that that's going to happen possibly in the next 1 to 3 years. But what I know right now is we have a low inventory market. It is a good time to buy if you can afford the payment. We do have some strategies available to help get you lower payments with permanent or temporary buy downs. These are good strategies. Happy to speak with you about them. But I wanted to give you a market update. Let me move myself out of the way. I'll show you what's going on with rates. So this chart you're looking at, here's December, right at the end of 23. This chart's actually showing rates going up or down, as we can see here. But look what's happened all of 24 so far. Rates have been going up. Fortunately, the last week or so, we have a little bit of a dip, and we're coming back down a little bit, and that's going to bring more people into the market. When rates were up here, More people got their offers accepted. There were less people buying. Now they're coming down here a little bit. It's going to bring more people into the market. If we get another run, we have an inflation number coming out this Wednesday. If for some reason that number comes in better than expected, that could drive rates even lower. Going to bring more people in, right? So waiting for rates to fall may not be the best strategy. Hope this helps. My name's Jeff Garber. I'm a mortgage loan originator. If you have any questions or you want a free strategy call, happy to do so anytime. Reach out. Have a great day.